Every minute you hesitate is a minute someone else is building wealth. The question is, are you investing? Or just existing? You've probably heard this debate 100 times. Should I put my money in the stock market? Or buy real estate? But here's the truth they don't tell you. The wrong decision doesn't just cost you money, it could cost you years of your life. If you're between 18 and 30, you're standing at a financial crossroad. And in this video, we're going to help you choose the right path, not just to grow your wealth, but to design your freedom. Let's begin your journey to financial power. Act 1. The Foundation of Wealth. Point 1. Accessibility. Imagine this. You're sitting in your room, in your pajamas, sipping cold brew, and you just bought a piece of apple. Not an apple, Apple Incorporated, that's the stock market. Meanwhile, real estate? It's like trying to adopt a child. Paperwork, background checks, inspections. Do you even lift, bro? Your credit score? But seriously, stocks are accessible. Apps like Robinhood or Fidelity let you invest with just $10. Real estate? Even with house hacking or FHA loans, you still need capital, good credit, and often a strong stomach. But hold on. Easy access doesn't mean easy success. Because what happens when the market crashes? And your $10 turns into $4? Point 2. Risk and volatility. The stock market is like a roller coaster, fast, thrilling. And sometimes it throws up your portfolio. Real estate? It's more like a slow-moving freight train. Stable, heavy, but when it derails, it's catastrophic. Stocks fluctuate daily. News, earnings, Elon Musk's tweets, anything can shake it. Real estate, on the other hand, tends to be more resilient. Housing crashes happen, but less often, unless, of course, you bought a condo in a ghost town. Or tried flipping houses with zero experience and a YouTube tutorial. But here's the twist, sometimes, more risk means more reward. Which one gives you better returns? Point 3. Historical returns. Over the past century, the S&P 500 has averaged around 10% annually. Not bad. Real estate? Including rent and appreciation, it's closer to 8 to 9%, depending on your market. But real estate offers leverage. You can buy a $300,000 house with just $30,000 down. If that home appreciates just 3%, you've made 10% on your total investment. That's the magic of leverage. You're using someone else's money to build your wealth. But leveraging can be a double-edged sword. What happens when tenants stop paying? Or the roof collapses? Point 4. Cash flow. One of the biggest advantages of real estate? Cash flow. Every month, tenants pay rent, and after expenses, that's money in your pocket. Stocks can pay dividends, sure. But a rental property can produce $200, $500, even $1,000 a month in positive cash flow. Unless your tenant is on vacation from rent for 6 months and their emotional support iguana trashed your kitchen. But passive income sounds great, until you realize managing properties isn't always so passive. Which one truly gives you freedom? Point 5. Time commitment. Stocks are set it and forget it. You can automate investments, rebalance once a quarter, and go live your life. Real estate? It's a business. You'll deal with contractors, leases, clogged toilets at 2 a.m., unless you hire a property manager, and there goes your profit margin. If time is your most valuable asset, how you invest matters. Do you want to spend your 20s fixing drywall, or building a diversified stock portfolio from your phone? But wait, what if you don't have to choose just one? Act 2, Strategic Perspective. Point 6, Liquidity. Need cash tomorrow? You can sell stocks in minutes. Real estate? Good luck. It might take weeks or months to sell a property. Stocks are liquid. Real estate is a liquid, but that can be a blessing too. It forces discipline. You can't panic sell your house during a news headline. Unless you're trying to flip a haunted mansion on Halloween. Then it's extra spooky. So, if liquidity isn't everything, what about control? Point 7, Control and customization. In real estate, you control the asset. Want to renovate, raise rents, Airbnb it? Go ahead. You can directly impact returns. With stocks, you're a passenger. Jeff Bezos drives the Amazon bus. You just hold the ticket. Some love that control. Others? They'd rather sip smoothies while their index fund does the work. But here's where things get interesting. How do taxes factor in? Point 8, Taxes and incentives. Real estate is a tax shelter in disguise. Depreciation, mortgage interest deductions, 1,031 exchanges. It's a buffet of tax breaks. Stocks? You'll pay capital gains taxes, and if you sell within a year, it's taxed like regular income. Ouch. The IRS loves short-term traders. They send them Christmas cards every year. So if taxes are better in real estate, does that make it the winner? Point 9. Barriers to entry. Let's face it. Stocks are easier to start. A phone. An app. $5. Done. Real estate takes planning, paperwork, and persistence. But sometimes, those barriers create opportunities, less competition. But what if you wait too long? Property prices don't wait. Neither does compound growth. Now let's shift gears, because this next point may change how you think entirely. Point 10. Mindset and lifestyle alignment. Here's the truth no one tells you. The best investment isn't just about numbers. It's about who you are. If you love numbers, automation, and freedom, stocks might be your jam. If you're hands-on, entrepreneurial, and love the hustle, real estate could be your empire. Your wealth isn't built from picking the perfect asset. It's built by consistently playing the game that aligns with your mindset. But what if you could combine the best of both worlds? Act 3. The hybrid path to freedom. You don't have to choose just one. Many of the wealthiest investors build a hybrid portfolio. Start with stocks to build capital, then scale into real estate. Or generate real estate cash flow, then pour it into index funds. This isn't about picking sides. It's about building a machine. One that works for you, even while you sleep. Because true wealth? It's not about having money. It's about having options. So, real estate or stocks? That's like asking, dumbbells or cardio? The answer is, both build strength, in different ways. But here's the secret weapon behind both paths: compounding. Whether it's appreciation, dividends, rent, or reinvested gains. The earlier you start, the harder your money works. And every day you wait? It's not neutral. It's a step backwards. If you want to unlock the true power behind both real estate and the stock market, watch my last video, The Power of Compounding, How the Rich Get Richer Without Working Harder. It might just change how you see time. Forever. Thanks for watching. Like, subscribe, share, and press the bell icon.